The last time Bitcoin did this was in September 2021, where we had a 58% pump following it. The time before was in April 2020, where we saw a 750% move after it. Will this pattern repeat or will it not? Let's dive into the charts. Okay, Megawad team, welcome back to the channel. Thanks for tuning into today's video. We're going to be answering a really important question today, and that is this the start of a macro trend reversal? Now, before we get into it, head down to the pinned comments, click the links, smash the like button, subscribe to the channel, and leave a comment if you do have any questions. All of that helps the channel grow, and it shows me that you appreciate and like the content I put out for you guys. So, we're going to be looking at a key indicator today, and that indicator is the 50 EMA. And the 50 EMA is an indicator that can help us gauge medium-term strength in terms of the overall trend. So for those of you who don't know what EMAs are and moving averages are, they generally tell us the overall strength of the trend in comparison to historical price action. So how is the price looking now in terms of trend strength in compared to how it was looking prior to this? So generally when the price is over moving average, so it's above moving averages, we generally have a more bullish outlook. We have a stronger trend. And when the price is below moving averages, we generally have a more bearish outlook or a weaker trend. And that is what we can see in the chart here. As you can see, when the price is below, we generally have this downtrend. And when it's above, we generally have an uptrend. It's as simple as that, guys. We'll keep it nice and simple today, okay? So why is a 50 really important? Well, a 50 isn't particularly a slow moving average, such as a 200, the 100, and the 300, and it isn't a particularly fast moving averages, such as a 15 or a 26 or a 4. It is more or less a medium-term moving average. It sits kind of in the middle between fast and slow, and that's what makes it a special one. It is a really special one, but so it can indicate points of which in the chart that could potentially result in macro shifts in the macro trend. And that is why it's key. It's not always going to be accurate, but it is always going to be a thing that we have to pay attention about, because it's always going to tell us, well, here is something we need to look at, here is something that could potentially lead to something, and often it does. So let's take a look at historically. Historically, as you can see, all these green lines represent a point of which the 50 EMA has been broken on the 2-day chart. And by broken, I mean a 2-day close above that trend line, above that EMA. As you can see, some of the biggest returns on Bitcoin's history we could have caught by actually looking to enter above that 50 EMA. We saw this fake out over here, which we'll come back and talk about in a second. This is a fake out. A 57% move here, 36% move here, 755% move here, 32%, 246%, 14%. Some massive moves of Bitcoin could have been caught just by using the EMA as a tool when it comes to looking for macro shifts in the trend. Now, there is one thing I do want to point out, and that is this over here. This right here is something that I do want to point out, because this is something probably no one's looking at. And when no one looks at something, it generally likely happens. And this is really, really important, because this is almost, I'm going to go ahead and say almost something we can almost expect to occur right now in the chart. If you look at the similarities, it is looking quite similar. What do I mean by that? Well, there's a common trading strategy using moving averages we use something called compressions and expansions. And compressions are when you have this compression, it's nothing more to it. It's compression where the price is moving upwards towards the moving averages, and the distance between that 50 EMA and the price is starting to compress. You have this tightening. And expansion is opposite, when they are moving apart, when there is expansion between the moving average and the price. Generally, after expansion, we have compression. And the reason why compression almost always leads to a trend reversal is because this compression is showing us a real-time change in the strength of the trend. That is what it's doing. So when we have the break over this moving average, it then flips and says, well, the trend is now favorable, the trend is now strong, it's now positive, it is more likely to pick up the momentum and continue to the upside. And that is what we see. Now, the problem is with this scenario, and this is very speculative, we could potentially see something like we've seen over here, which is this 2-day close above, okay, and then a fake out back below. And that is what I'm worried about. And that is what I'm going to say. I'm not going to take this 2-day close seriously. I will be waiting for a second candle close, another 2-day close above this 50 EMA to just confirm the fact that we're not going to see some sort of fake out like we saw before. As you can see, we see expansion, compression, expansion, compression, expansion, and now compression. Okay, very similar to 2018 because it occurs like this in most scenarios. If we go ahead and flip the chart, you'll see something very similar as well. If we go ahead and take a look at this, this was the top in April. We saw a very similar thing. We saw expansion leading by compression, more expansion, a fake out, expansion, and then we finally broke through and went upwards. Okay, so or downwards in this scenario. So we're seeing a similar thing play out. Now, if you've been following the channel for a long time, you would know I called the top in November on the 14th of November 2021. I said, look guys, bearish, we're looking bad, the macro structures are looking bad. You can see the post over here. I'm going to go ahead and show you the post. If I go to my page over here on Telegram, on Twitter, you'll see it right over here. That was our prediction. We said, look, we're expecting Bitcoin to come down to 20,000, and no one believed us, of course. Very few people, a lot of the people on this channel now are still watching. You guys were there. A lot of people didn't believe us. A lot of people did. We came down. We said, we're at, 40,000 now. I do think we're going to change our prediction. We changed it and we set $18,000 at the bottom. And we've been planning to buy $18,000 this entire time. And we did. We caught $18,000. Okay. Now, the reason I'm mentioning this is because it's very, very relevant, because now we're seeing actual lagging indicators, such as these moving averages, start to show us some significant change in the macro strength. And it's telling us, well, maybe this 18K prediction was in fact correct. It is validated. We are going to continue upwards. This is a really good thing to see for those of you who bought. But it poses another question. What happens to everyone who didn't listen and didn't buy, and those people who just came and tuned in recently? Here's the thing. We need to go look at this, okay? We need to look at this chart. Where would be the next safest place to buy Bitcoin? I'm not saying the next best place to buy Bitcoin to make profit. We're talking the next safest place to buy Bitcoin if you're looking to accumulate, provided you missed that $18,000 bottom. Where would it be? Very simple, guys. We'll be looking to acquire Bitcoin either a very small amount on the second 2-day close above the 50 EMA on the 2-day chart. I'll buy a very small amount, or you can accumulate a larger amount above the $24,000 to $22,000 horizontal support range, provided that becomes support. The reason being is we'll be clearing the major crunch zone we had prior to the 2021 run-up, okay, in December 2020 over here, as well as breaking upwards from this macro downward trending resistance, which we found a lot of resistance in April, May, or should I say March, April 2022, where everyone thought we're going to the moon again, but we just got rejected and head back down. Okay, so those are the two plans. That is what we're looking out for. Let's take a look at the overall market. And before we move on, I don't want to talk about this, because we're talking about how this 2-day candle above the 50 EMA could be a potential fake out. We could see something like we saw in 2018. And here's a chart to support that. The total cryptocurrency market cap is actually currently finding resistance on this major diagonal resistance range. And I've been saying this entire time, this chart is probably the only chart that still actually genuinely concerns me, because this is a descending triangle. This is a descending triangle formation. And we already know, guys, descending triangle formations are bearish patterns. They generally break down. And not always. They don't always break down. They have a higher probability to break down than they do to break up. So therefore, until we break out of this descending triangle, find support above it, okay, we have to assume that this could potentially actually retrace back downwards. And therefore, if that occurs, Bitcoin will head back down to 19,800, potentially 18,800, and this move upwards would be that 2-day fake out we saw in 2018. And that is why I do not think acquiring a lot of Bitcoin right at this particular point in time is a smart idea. If you were going to buy Bitcoin, you should have bought Bitcoin at 18,000. You should have bought Bitcoin 19,000 when it was consolidating sideways at the bottom. You should not be buying now in these green pumps. The next safe place to buy is statistically another 2-day close above the 50 EMA based on historical data. Even then, it's a swing trade. It's not even a long-term position. But your next long-term accumulation point is above 24,000, okay? For your safest long-term entry. Simple as that, okay? So that is a piece of information that could actually validate or verify that potential rejection. Of course, we are above 1 trillion 1 trillion on the market cap, which is obviously a great sign, but we do need to see that break of this ascending triangle to invalidate this bearish continuation and even further confirm a continuation upwards. And that will happen if Bitcoin closes a second daily candle above that 50 EMA. Simultaneously, this should break upwards. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to BitGet with the link down below and join myself and all of our other VIP members and other members who trade on BitGet daily. There's a whole range of benefits and features you can actually get by trading on BitGet. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures, is one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the Mega Whale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. So keep an eye on that. Let's look at the rest of the market. DXY has crashed down a lot, guys. Obviously, that has caused a lot of upward price action in the cryptocurrency space. The Dow Jones found a lot of support again at this horizontal resistance range, support range, after faking down below, pushing back up again. No macro strength here. There's no macro strength here yet, guys. We need to break over this range here to see any macro strength and a continuation upwards. If we break through that level, we'll be clearing these levels. We'll be pushing up to this level very, very easily. 34,000 very easily. Until that, we are looking for, you know, some sort of rejection and a continuation downwards. Not trying to be over bearish, just look at the charts. S&P 500, similar thing, guys. You know, we came back down from this range. We told you guys we're breaking up. Then we said, you know, we're going down here. Now we're bouncing again. But again, it doesn't matter. It doesn't matter. We need to break through these levels. You know, we look macro bullish again when we're above here. Until then, we're not macro bullish on this chart. Bonds have been increasing. The 2-year bond went absolutely ballistic. Look at it. It's gone up and down. Crazy, crazy. Looking at the overall stuff over here for a cryptocurrency, we can look at the monthly returns on cryptocurrency. It would be now very positive. We see 4.43% for November. And again, November is historically a quite positive month. It's quite rare that we see a red month for November. It is generally a positive month, so we should expect a green month for November. And overall volatility, guys, it should have changed a little bit. We saw a 1.65 overall volatility. So volatility is increasing. Like we said last week, as volatility increases, we will see that price follow. Volatility and price, they go hand in hand, not specifically in terms of the price, because as you can see, it's different. But after these massive drawdowns in volatility, such as over here, okay, such as what we're seeing now, such as over here, we generally see a continuation upwards or continuation downwards, a rapid price surge after these periods of drops or valleys in volatility, or even peaks in volatility, okay? So we can expect that to occur. Liquidations off the chart, of course, pretty high in liquidations over the last 24 hours, of course. A lot of liquidations in Bitcoin, a lot in Matic. Matic went through a moon, and some other altcoins over here, a lot of liquidations. But all in all, guys, we are looking optimistic, and I like to leave with that. We are looking optimistic. I do not think now is a safe time to be accumulating, okay? Wait for those conditions of entry and then look to capitalize. Okay, with that being said, guys, I'll see you guys tomorrow. Have a great day. Cheers.